Alright, so now that you're clear on how to trade the long side of the range strategy, let's look at trading the short side. So the rules are pretty much the same, it's just the inverse of it, right? So again, the first thing is we want to see an FX pair in a consolidation, a range making same highs and same lows. So once again, resistance level tested 3 times at least, support level tested 3 times at least. So let me draw that. So again, we want to see the price was normally in a downtrend first, and then it gets stuck in this particular range. Something like that. Okay, so we want to see a clear level of resistance. Oops, let me just draw back a bit more. Okay, now it's supposed to be a straight line, right? Okay, so it's tested once, twice, at least 3 times, right? So same highs, same highs, same highs. We have a strong level of support, tested once, twice, 3 times at least, right? So that's the first thing. Next, if you're going to go short, we want a downtrend bias. Okay, so what's a downtrend bias? We want the 50 EMA to be below the 200 simple moving average. So again, we want to see that kind of like a 50 moving average somewhere there, and it's above the 200 moving average. So downtrend bias. Okay, so in this case we're looking to sell or go short, all right, at this resistance level. Okay, so we're going to place a sell order there. So when the price goes up, we anticipate it's going to sell, reverse, back down, and we're going to buy it back over here to close our trade for a profit. So that's the whole idea, right? Again, your resistance level should be below the 200 moving average. And again, the highest probability is when your stop loss is above the 200 moving average. It is not a must to have, it's a good to have. So the 200 acts as a strong level of protection in case it moves up and it could be hitting your stop loss. Next, we're looking at the 50-minute candle, so always check the higher time frame. Always look at the hourly candles, H1, ensure at the hourly candle chart it's on a clear downtrend as well. So again, how do you define a downtrend? The hourly candles should be below the 50 EMA, 50 EMA below the 200 simple moving average. Right, so that is the short setup that we're looking for. So once we've got a short setup, we look to place our orders. So again, for our entry point, we place a sell limit order at the resistance level. So in other words, we are looking at the price going up and we think, okay, it could be reaching that resistance level. We place our sell. We place a sell limit order at that resistance level. And again, for example, that could be maybe 1280, for example. That could be the price. Okay. So the moment it reaches 1280, our order will get filled and we will sell at 1280. Okay, or higher. Okay. Now again, it may not always get filled. Sometimes you place your sell limit order there, the price never reaches, comes back down, you just cancel your order, all right? So you may not always get it filled. So that's where we place our entry, sell limit order at the resistance level. Next, we place our stop loss, and our stop loss would be, again, 8 to 10 pips above the entry price. Okay, and you'll be a buy stop order. If you're using MT4 charting platform, just put in your stop loss, it will be automatically a buy stop order. So roughly, our stop loss will be here. Let's put SL, stop loss, which is a buy stop order. Okay, at 1288, for example, 8 pips above the entry price. So that is my 1 hour distance, which is 8 pips. Again, it could be more than 8 pips, at least 8 pips. All right, it could be 10 pips, and so on and so forth. Right. Next, I will place my target price which is a buy limit order at the support level of the consolidation. Okay, so that's my entry price, sell limit, stop loss. My profit target must be at the support level, or rather, it must be above the support level, okay, but not lower than the support level. So my profit target will be somewhere there. TP will be take profit, profit level. So it'll be 1280. Okay. Now again, I have to ensure that from the entry to the target price, I am able to get at least 1.5 R of potential return. So I must risk 1 to make 1.5 or more. So for example, if the support level happens to be, say, at 1268, for example, right? Would it be a favorable trade? Yes, because I would potentially be able to capture 12 pips, right? And 12 pips out of 8 pips would be 1.5. So this makes it a reasonable trade, right? Great. So the moment the price goes up, it hits my entry price, I get sold, comes down, take my profit, and I'm out with a 1.5 R win. Okay, so as usual, low risk filters before entering a trade. Go to Forex Factory, check the upcoming news events for the day, ensure there's no major news release, any red news within the next 10 candles or the next 2.5 hours. If there is, avoid taking the trade. And again, ensure there's no significant support levels within 1.5 R of the entry price. Okay, so before it can hit the target price, we do not want to see any kind of support that could impede our currency pair going to our target price. So let's take a look at some examples on trading the short side of the range setup. So over here I've got New Zealand yen on the 13th of November. And again, I spotted a channel range setup. And you can see that there's a strong resistance over here. All right, tested 1, 2, 3. Strong resistance at 78, 76. And then we have a support as well. Support at 78, 62. Now some of you could be asking this question, but Adam, didn't this candle break the support, right? You said, shouldn't be broken, right? You broke the support. Now, here's the thing. We are going short. So when we're going short, are we more concerned with the resistance being strong or the support being strong? The answer is the resistance being strong, right? Because when we're going short, we want to ensure that when it hits the resistance, it will be reliable and it goes down. So we want to make sure that the resistance is not broken, okay? But if the support has been broken, like in this case, we're fine with it. Because if we're going short, we want it to go down. If it goes lower than what we thought it would go, that's perfectly fine. Does that make sense? Now, similarly, when we are going long, when we were trading the long setup, which is more important, the support being strong or the resistance being strong? The answer is the support, right? Because if I'm going long, I want to ensure when it goes down, that support is reliable, it's going to bounce and take me up. But the resistance, if it's easily broken, it's fine for me. Because I'm going long, if it goes higher than my intended resistance level, I'm still profitable. Make sense? Okay, so I'm more concerned with resistance for shorts, more concerned with supports for longs. Yeah. So in this case, my resistance is proven to be a very strong resistance. My support was pretty strong as well, except it broke out over here, and it's fine. So I noticed the price was going up here, and it was going back to 7876. Okay, where I saw it had been a previously strong resistance. So I placed my sell limit order at 7876. So if it reaches 7876, it would trigger my sell limit order. I'll get filled, and I anticipate it will come back down again. So that was my entry price. So I placed my stop loss, as you can see, again 8 pips above my entry price, which was 78.84. Okay, and it so happens again my stop loss is above the 200 moving average, which again gives me more confidence. Okay, so notice the it's a downtrend bias. the 50 moving average is below the 200. So the bias is down. So I'm pretty confident. Downtrend bias, all right? Strong resistance, highly likely is going to go down. So where's my target price? My target price would be at the previous support level, okay, which was at 78.62. That's my target price. So you can see that from 78.76 to 62, it's 12 pips. So my potential profit is 12 pips. My risk is 8 pips. So again, I'm risking 8 to make 12. I've got the risk to return ratio of 1:1.5. That's enough, okay? So the price went up and it hit 78.76 and I got filled. And what happened? You know, it kept going higher, right? And it found the 200 resistance and boom, came down and hit my profit target. All right? So this was how the trade played out. Alrighty, let's take a look at the next example, Aussie CAD 10 of November. So again, you can see a downtrend bias, 50 moving average, blue line below 200 moving average, red line, downtrend bias. Do we see a clear range? Yes, I do. Or yes, I did. So you can see it's in a range over here with resistance, 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 right? Tested once, twice, 3 times, and resistance was at 97.20. So this tells you that there are many sellers that are looking to sell at 97.20. Do I have an obvious support level? Yes, I've got support over there, support, support, and support. Oops, over here. So support levels at about 97.08. Now again, you can see that it did not exactly touch that support. It broke through that support, and again, it broke through over there. So again, when I'm going short, which is more important, resistance or support? Resistance, right? Because when I'm going short, I want to ensure that my resistance is reliable to protect me from going higher. But if it goes below the support level, I'm fine because I'm going short. Lower is more profits for me. So once I recognize that pattern, I saw the price going down, hitting the support, and then going up, going up, going up, and say, okay, it's now going back to 97.20. So I anticipated it's going to hit the resistance and come back down. I placed my sell limit order at 97.20. Right there. That was my sell order. And I placed my stop loss 8 pips above my entry price, which is 97.28. And again, it happens to be above the 200 moving average. So that gives me an added level of protection. Yeah. So that's 8 pips. My profit target, I placed it just at the support over here at 97.08. So 97.20 minus 97.08, that's 12 pips. So I've got 8 to 12. I've got risk to return ratio of 1:1.5. It just meets my criteria, so it's a valid trade. So what happened was the price went up, and you can see at 97.20, it triggered my sell order, and as expected, it was a strong resistance. It came down right away and hit my profit target. So this was another winning trade on the range. Next example is on franc yen. So once again, downtrend bias, 50 moving average below the 200 moving average. And again, let me do mention again to remind you to always check the H1 candles as well, right? Ensure that the hourly candles are on a clear downtrend, which means the hourly candles are below the 50 EMA, and the 50 EMA is below the 200 moving average when we're going short, right? So recall when we go long, it's the opposite. We want to see the hourly candles on a clear uptrend as well. So do remember to check the hourly candles, all right? We've got a downtrend bias, and again, we can see support over, resistance over there. Resistance tested once, tested twice. And this was considered a test as well, right? Remember, in technical analysis, support becomes resistance. So you can see here, this was a strong support. Can you see? Support. Okay, so I call this one test over there. That is another test, 2, There's 3 tests. So I've got 3 tests, which is my minimum for strong resistance. I've got my support, right? Tested once, tested twice, tested 3 times. So I've got my range, right? So at this point of time, the price was going up. And I said, okay, it's going back to that resistance. I anticipated that it's going to reverse. I placed my sell limit order at 11437, as you can see. Profit target 8 pips above my entry price, which is 1145. Now I can see in this case, my stop loss was not above the 200 moving average. It was below the 200 moving average. So it is still a valid trade. It's just not as highly probable, but I would still take that trade, right? So I still took that trade. As long as, remember, when you're going short, your resistance must be below the 200 moving average. That is a must, okay? And when you're going long, your support level must be above the 200 moving average. So that's a criteria that must be met. So that's my entry price, that's my stop loss price, this is my stop loss, SL, and my target price would be the bottom of the range at the support of 11425. There we go. So sure enough, it hit 11437, sold it there, and boom, hit my profit target. This was a pretty quick trade for another 1.5 hour win. All right. So this is how you trade the short side. So again, let's take a look at some live trades I've done and notice how I placed the orders and how I exited the trade, how I managed the trade. Let's take a quick look. All right, so this concludes lesson 4, trade the range strategy. If you've got questions, do send me an email and do check out our daily trade examples as well. This is Adam Koo, and may the markets be with you always. Enjoy trading and let's clock those profits together. I'll see you guys soon. All right, so it's time to look at some live trades, and the first one is pound yen on the 18th of January. So I'm going to demonstrate in the video how I identify a potential trade, how I place the orders, and how I manage the trade. So let's take a look at this first trade on setting up a long trade the range strategy. Okay, so I'm looking at pound yen, 50-minute candles, and looks like it's in a bit of a range. So there's a support somewhere over there, and a resistance over there, right? So I could buy it at the support and exit at resistance. So it's a bullish bias because the 50 moving average is above the 200. And if you look at the hourly candles, it is also on an uptrend. 50 is above the 200, 18 is above the 50. Okay, and one of the rules that is useful to have is that the support level is above the 200 moving average, which it is in this case. So let's take a look at how wide the range is. So from the bottom of the range to the top, it's about 25 to 26 pips. So that's my potential profit, about 25 pips. So in that case, I can afford to risk 12 pips because I'm risking 1 to make 2, right? So I can put my stop loss about 12 pips below the intended entry price. So I can size my position by saying, okay, I'm going to give myself a 12 pip stop loss. I'm going to risk 2% on my account, and I'm going to trade 0.98 lot. So that's how you calculate the lot size. So we're going to trade 0.98 lots. I'm going to put a buy limit order at 15369. And stop loss be 12 pips below 153.57, and profit target be about 153.95. Okay, so there you go. I've placed my order, and we shall see if the price indeed will come down to this green line. That is my buy limit order. So only when it goes to the green line or below, would it fill the order? And hopefully after it fills, it will revert back to the top of the range and I'll exit, exit with a profit. Okay, so again, notice that this support has been tested once, twice, 3 times. So there's a support that's been tested 3 times, so it is a reasonably strong support with the 50 moving average as an additional support, right? And the stop loss is below the 50 moving average. That gives it a bit more protection. All right, so let's see what happens. Does the order get filled? All right, it's been a few minutes, and as you can see, the price indeed came down to the buy limit order. So our trade has been triggered. We got in at 153.696. I did change it slightly by 1 pip up, my entry price, and my stop loss 1 pip up as well. So my stop loss is still 12 pips away. So again, I've got 12 pip buffer, and from the entry to the target price is about 25 pips. So there is a good 1 to 2 risk to return ratio on the trade, and we shall see how it turns out. Alright, so checking up on our trade, as you can see, we bought here, alright, and that's our target price, that's our stop loss. So it's gone as we planned. It bounced off the support and the 50 moving average, and it's moving towards the target price. So we are pretty close to the target price right now. And once it hits the target price, you will exit with a winning trade of 2R. So that is how you trade the range, right? So if you take a look over here at our terminal, here, you can see bought at this price. There's a stop loss. Target price is going to be hit, so it's in green, and you can see the running profits over there. All right, so that's how you place an order for trading a range. All right, so my trade just hit the target profit. As you can see, once it hits the target profit, the lines are gone. So this next example is on Frank Yen on the 28th of December. And again, this is an example of a live trade which I attempted to take, but the order was not filled. And that happens sometimes in trading. In trading, you may identify a great potential setup, and you place your orders, but it doesn't get filled. And when that happens, you will then cancel your orders. So this is a good example of a great setup that just did not get triggered. So again, take a look at how I identified the setup, how it met the rules, how I placed the orders, and how I eventually canceled the trade. Alright, so I'm spotting a potential trade on Frank Yen on the M15 candles. As you can see, this price is in a consolidation, right? We have got a strong, we've got a resistance there. We've got a support over here. It's been tested once, twice, 3 times. Looks like the price is coming back down to hit the support. So I want to be a buyer at this level. And again, I'm confident that it will bounce back up because there's an uptrend bias, right? The 50 moving average is above the 200 moving average. The bias is going up, okay? Now, so let's take a look at where I'll place my buy order. So I'll probably place my buy order somewhere here, right at the support level at 115.14. Thereabouts, okay? So where would I put my stop loss? Now I'll put my stop loss at least 8 pips below my entry price, right? At least 8 pips. So 115.14 minus 8, what's that? 115.14 minus 8, that's 115.06. So my stop loss would be at 115.06. Can you see that? That'll be my stop loss. Now, in this case, if I buy over here, right, that's my entry price, and this is my stop loss price. Okay, stop loss. This would be my 1 hour distance, 1 hour. So if it can reach back to the resistance, how many hours is that? Right, that's actually it's about more than 3 hours. So I'm risking 1 to make 3. Now I don't have to be so, well, use the word greedy, right? I'm pretty happy if 1:2 or 1:2.5. So I would rather be a bit more conservative, and I would rather give myself a bigger stop loss. So instead of 8 pips, I can afford to give myself 10 pips, for example, to 115.04. Why can I afford to give myself a wider stop loss? Because my profit target is very reachable, given that the resistance is pretty far away. So I can still get 1:2 with a wider stop loss, which will make me feel a bit secure, because I want the stop loss to be below that 200 moving average, so that 200 moving average acts as a support level for me. Make sense? Okay. Now at the same time, let me check the hourly candle. So go to H1, and you can see on the hourly candles, it is also a clear uptrend, with the 18 EMA above the 50 EMA above the 200 SMA. So H1 is aligned to M15. They must always be aligned. They both must be on a clear uptrend. And you can see that on the hourly candles, if I place my stop loss at 115.04, which is this line over here, it is below the 50 moving average. And again, that gives me an added buffer of support to protect my stop loss. So this is a pretty decent trade that I think is of good probability, and I'm willing to take this trade. So this is franc yen. And how I would size my position using the sizing calculator. So if my account size is 5,002 and I want to risk 2%, I place my stop loss. In this case, I'm putting the stop loss at 10 pips away. I select franc yen as my currency, calculate, and you can see the number of lots will be 1.17. So I'll trade 1.17 lots, which is 117,000 Swiss francs. Okay, so 1.17. Okay, so I'm going to click new order. 1.17, and I'm going to put a buy limit order. So pending order, buy limit, and I'm going to buy only if it reaches 115.14. 115.14. Stop loss would be at 115.04, 10 pips away, and my profit target would be near the resistance. So I could put it at 115.42. Okay, so let me see, 115.42 minus 115.14 is potentially making 28 pips. All right, so I'm risking 10 pips to make 28 pips. That's a pretty good risk return ratio. Okay, it's like risking 1 to make 2.8 thereabouts. Okay, if I want to be a bit more conservative, and I say, okay, let's not be greedy, let's just make 1:2, you can also do that. So let's be a bit more conservative and say, okay, I just want to make 20 pips. I'm risking 10 to make 20. All right, so my profit target would be 115.14 plus 20, 115.34. So let's just place the profit target 115.34 if you want to be more conservative, because it may not reach that resistance, right? So I'm going to place the order. There we go. Okay, so this green is my entry. It will only be triggered if the price goes down and hits that, and I expect it to bounce up right after that. My stop loss is below the 200 moving average. That's protecting me. I've got an uptrend bias, and my profit target is simply just reaching this red line over there. Right? I'm not even looking at going back to resistance. If I can reach that red line, I'm risking 1 to 2. That's a pretty good deal, and I'm pretty happy for that. Again, if you're more aggressive, there's nothing wrong with putting your profit target higher and getting more than 1 to 2, right? It really depends on your style of trading and how conservative or how aggressive you want to be. I'm just showing you the most conservative style you can find. All right, so let's wait a while and see if it hits our buy entry. Okay, so I'm following up with the franc yen trade, which I placed the buy order over here, the stop loss over here, and the profit target over here. So I was hoping that it would go down and hit my buy order and then go up and hit my profit target. But as you can see that it never reached my buy order. It didn't go down to the support level, right? In fact, over here it kind of like reversed back up and it looks like it's really going back up. So in trading, this happens, kind of like fishing, right? You put your bait there, you're hoping the fish would bite, and sometimes the fish bites, but sometimes the fish doesn't bite. And well, if the fish doesn't bite and doesn't take the bait, right, then the trade is no longer going to be a valid trade. So in this case, I would just cancel the order and move on to the next trade, and again put in my bait and see which fish would bite. And again, as long as a fish bites once in a while, I'm going to make a pretty good, decent profit. Okay, so I'm going to cancel the trade because never reached my intended buy order. This is franc yen and 15 candles.